Hello everyone and welcome back to the Bucket Shop. We warned you about this happening a few videos ago, and the 10-year treasury note yield is finally making new highs again, which of course is freaking out the stock market. Now, I just want to start off with this article here by CNBC. The treasury note yields, the 10-year treasury yield reaches 4.98% of signs of still strong jobs market. So, these are the reasons why we are telling you that even within this sideways move that's developing here on the market, on S&P and on NASDAQ, during this sideways move where we still have, a strong jobs market, we are seeing the 10-year treasury note yield at levels where we could be seeing a peak soon, even though the chart is not showing any signs of being bearish just yet. So just so I can show you what I'm talking about, let's pull up the 10-year treasury note yield. And as you can see, once again, making new highs. I think we approached or broke the highs from 2007. So, okay, we were approaching the highs from 2007. So a big area of resistance here. Can we go higher? Yeah, we could very well go higher. There's nothing on the chart right now that tells us otherwise. But if yields, peak here sometime soon and sort of get a little pullback here, maybe go touch the 50, the stock market could start rallying. They're going back up. Right on this day, right here on Tuesday, we told you to be watching for the 10-year to be making a new high, and that is exactly what happened. And the US 100 and the S&P did in fact sell off yesterday. So just so I can show you what I'm talking about, if you follow me on Twitter, you get my live updates on the market. It's been going great for us over there. We had our signals tell us. We had a few great signals here. We had of course, the top, the very peak. We had this wedge drawn out that we notified you about. While we're still inside of the wedge, we came back, tested it 3 times, and then we started the move down here. In this move down, we told you that the opportunities for the bears were coming right here at the 50-period moving average. We turned off of that. Down here at the 200, we told you this is an interesting level to start taking profits. As you can see, we bounced. We came back to this critical level once again. Over here, it's still an area that is an opportunity for bears, especially if you start developing a lower high. That is exactly what happened. Once again, we crashed down to the 200 right around here yesterday. In the beginning of yesterday's video, I told you that, okay, now that we're crashing down here again, it is telling me that we probably want to go a little, lower than this low. And because we did make a slightly new low. We rallied back up to the 50. This rally had everybody talking, everybody going, oh, here we go. You see the markets go. And then we had our little bearish reversal pattern here in the evening star reversal pattern. And we turned down. We got right back below the 50. We cleared the 20, the 10, and the 50 in one candle there, just as we came above it, honestly. And then we continued lower for the rest of the session, finding rejection around the 50 once here, one more time, which was another opportunity for those who wanted to partake in this one. I didn't, because I thought these were better here. But, right here, and right here were our opportunities for bears. And once again, this morning, whenever we got here, I can show you the tweet, and then you're going to see that later on. We came right back down to our zone of demand. We kind of bought it up. Over here, we told you this was another pretty good spot to be taking some profits here on US 100, because we were approaching the 20-day moving average. You always want to do the responsible thing when you're trading if you want to be successful in this, of taking your profits when you can. It's counterintuitive. You kind of want to let it run, maybe, or maybe you might be scared and take them too early. I don't know, but others might just let it run, thinking that, oh, it's just going to keep going. Nah, you want to be able to take some of those profits off and lock in some of those gains. You do that every time a little bit. Some trades are going to go in your way, some are not. I maintain this position at the peak here, at the very peak, because I believe that is a peak and that we're going to make a new low. That is why I'm still holding on to it. Did I get out of this position when we came down to the 20-day? No, I did not. Did I get out of this one? No. Did I get out of this one? Yes. So, you have to manage risk in order to survive. And if you don't, one day or another, it's just going to end up blowing up in your face. So always take your profits when you can and cut your losses quick. So we had the other area here of support under the 20-period moving average. On the daily chart, we told you to be watching for a bounce, and right now that is what we're getting. We've bounced since then. What is that? 1% from the lows. I think the 20 is right around here. Let me just go ahead and pull up the 20-day moving average. And I do also want to point this out here. We do have a bullish divergence on the 1 hour chart of futures for NASDAQ. So that's probably what's giving us a little bit of traction. How high are we going to go with this bullish divergence? That is what we don't know. That is when you use your overall understanding or, your thought process on current market conditions to determine where the moves, which move is going to be the primary trend here. I think that there is a strong chance that we go lower. If this is all we get here for the bears, then I'm open-minded to it. If I start seeing signs of a breakout and things looking very bullish, the moving average is getting another bullish realignment with the 50 getting back above the black line here, the 200 with the 20, the blue line, and the 10 period moving average also getting back above the 50 and the 10 holding above the 20. Price action bouncing off of these kind of like it is bouncing off of them right now. If we start seeing all those things happen, then I can say, okay, this was probably the bottom here in October. We had a nice little move, nice little critical zone there that we kind of established, and then we came and got a higher low. Now, where could that take us? Once again, we are very bullish on the market. I think it's going to take us to new all-time highs, but right now we're bouncing off the 20-day moving average. So let me just pull that up for you so I can show you what I'm talking about here. Let me just pull up my moving average. Oh, I apologize. I need to get rid of this MACD because, yes, I do have the free version of TradingView because I don't have enough subscribers to have the pro version, I guess. So I'm just going to go ahead and pull out my 20-day moving average, set it, change it from blue, give it a color that nothing else has, like a nice orange. There we go. And that is our 20-day moving average. Once again, we came to it here. I'm not sure what time I told you I posted the tweet there, but I was looking at that area. If I go back into my, let's see, home, now it's going to be on profile. Let's see. So I posted about this right here, about 15. Okay, so after we made that little low there, I told you be on the lookout for a bounce from these levels. And what has happened? We've gotten a bounce from these levels. It was right there that I posted the tweet. So, taking some profits here, if we just start turning, and I'm fine with that, At least I took profits here. I still have a position open in case we go lower. If we come back and even take out all of my positions, well, guess what? I would have still made money within this move down here because I've already taken profits one time here after a pretty massive crash. I took profits once. We were 3% from the top, and from our second position right here, we were 1.86%. So took those profits, we're able to reestablish here. Now we're taking profits again here. You see what I'm saying? So now, even if I'm wrong and the market ends up going bullish and even my position at the peak here ends up being taken out, at least I managed risks and I assured that, when I was right, I made money. So this is really, how you want to be thinking about the market. Right now, I think the market is about to open in 8 minutes here. So we'll be watching to see what happens around the open. Do we just start selling off? I mean, we're opening higher, which tells me that maybe we're going to get a little bit of sideways action. I did tell you to be on the lookout for some sideways action. If I pull up the cash index, as you can see, we're right at the 20-day moving average, and that we came and tagged again this morning in the go back session before starting the rally. And off of that level, we could be getting a bounce. I told you to be looking for it. We are getting it. We are getting a sort of a little reversal pattern here. If this next hour, if the first hour of trading can close above, 14,908 on NASDAQ, we're going to get a pattern, a Morningstar reversal pattern there, which is a bullish pattern. So we'll be looking to see what happens from that. Can we get a follow through and confirmation? Confirmation and follow through, those are going to be the questions. But right now, there is a possibility that, we can rally back up to this bear flag area, back up to the 50. The 50 is still above the 200 here in the hourly chart of the cash index. The hourly chart of the cash index is very similar to the 4-hour chart of futures. If I just show you that, you remember how the moving averages were positioned there. As you can see, we sort of have the same thing here with the 50 above the 200. We're getting a cross between the 20 and the 200. So maybe we rally back into that. So we'll be really looking to see here what happens. We could rally all the way up to this level, which is why, I did take some profits right here at the 20-day moving average. I believe that the rally could be a little bit longer. We did get some distribution, and I did warn you about this whenever it was happening. I told you, you get these drops they let it buy. Drops, they let it buy. And we got two of those. You usually get like 2 or 3. We got 2 of those here before starting to sell off. So maybe we open higher and we just keep on going lower. I'm telling you, there is a possibility based off of this distribution here. Maybe we come back one last time up to this level, maybe break out a little bit from it, maybe go all the way up to, what is it, 15,280, 15,300 before really turning lower. We'll see exactly what happens, but from here, I did warn you about a potential bounce, and we are starting to get it right now. Seems like, all right, let's just go back into a little bit smaller of a time frame, 15-minute time frame. Okay, we're pulling back up to the 200 period on the 15, which is pretty much the 50 period moving average on the hourly chart. Russell is still not looking too good. I told you that might be a bottom. We'll see. You know, maybe we won't go below this level. This is a very important level of support here. If we break this, then of course I think we're going lower. But you know, you always want to be looking, I'm telling you, for these sort of little first waves there. You usually pull up to the top of a wave. So we'll be watching to see what's happening surrounding this area. We are going sideways for the moment here on the 15-minute chart for the Russell 2000. So we'll be watching to see what happens from all of this. Now, the S&P 500. S&P 500 actually looks to me like it's getting, what is this? 1, 2, 3, 4? Like, what is this? You know? 1, 2. I'm not too sure. S&P is also bouncing surrounding its 200 period. I mean, its 20-day moving average here. We haven't really reached an important level of support for the S&P, in my opinion. We did reach these little highs here, so I don't know. That's why I'm saying I think it still could go lower. I took some profits off of the table just in case we rally. You know, if we go lower, I still have my position and I'll be fine. And that's how you manage risks. So I hope you enjoyed this video. We cannot wait for there to be a update on the Fear and Greed Index to see where we're sitting. I'm not sure if that comes at the end of the week here on Friday or next Monday, but we'll be watching to see what happens with the Fear and Greed Index. I think the market is going to start freaking out again. I think we're going to get an extreme fear event that's going to create the real bottom here after another capitulation sell-off. Has capitulation sell-off started already and we just keep going lower and lower and lower right now? Maybe. Do we start going sideways? Maybe around the 20-day moving average? Maybe. That is why I'm telling you, when you approach a level of support, taking profits is interesting because, you know, you could get faked out a ton of times here if we start going sideways and doing some crazy stuff. That's why, you know, you take your profits. You know, you still have a position in. If we start going up, it doesn't matter because at the end of the day, you're risk-free and you're good to go. So thank you for watching today's video, and I'll see you at tomorrow's open. Bye.